All right. Good morning, everybody. Thank you for attending. Okay, so today we're going to be talking about quite a few things. We've got updates, no tax on overtime, the new Michigan UI update where you got to pay your taxes differently to the Michigan and different files and everything that we've done. Next webinar will be January 5th, and probably taxes will probably one of the topics will be, taxes where we are, things like that with the new year taxes coming. So the big thing for today for the agenda is the updates, and I'm going to be doing a big presentation on the no tax on overtime and how that's going to be working for the new year. So you guys can be able to see that and be able to get started getting the settings you're going to need to get in place for that to be calculated correctly on your machines.
So the first thing I want to point out is that we created the MERS test file is now available in ProFund Accounting. All you have to do to run the test file is you go into MERS, and when you run the MERS, run it like normal, select your MERS plan, your payroll, select the payroll year and month, run it, select your deduction codes, enter your plan number, which I believe that in this case would be your new plan number that is assigned to you, and then click calculate. And then at the bottom, instead of clicking create, the upload file, there's a button that says create test file, and it will generate the test file for you to send to MERS. So you probably want to get that going. Again, if you have any issues with that, please let us know and we can fix the formatting. So there's no way I could test them. In the employee comp package, we fixed an issue where you had to load the bank history before making a bank adjustment. Now you could just go in there and make a bank adjustment without having to click the load history button. We added notes as a column in the bank history grid. We added a button if the note is too long. So if the note is too long, you can just click the button and it'll show you the entire note. We added the ability to enter the journal description to the following menu items when creating the journal. So in fringe benefits, cost of roads, post balances forward, equipment wheel hour. For those four menu items, when you go in there, there'll be a spot that has the journal description our typical pre filled in one, but then you can change it if you want. So we know that some people like to change the journal entry. So now instead of having to reopen the journal in GeoPost and change it, you could just change the journal description right there. In the funds window, we added a copy, so you can now copy a fund. This will copy the selected fund to this will copy the selected fund to a new fund. The fund account links are copied and updated in the new fund, so it'll automatically create the new account numbers if needed. Otherwise, it will just find those account numbers if you already created them and link them up. So again, I'll show what that does. We updated the fringe benefits spread. The fringe spread can now be greater than 100%. That was more of a bug we fixed. The other thing we changed was the calculation will no longer overwrite any journals previously calculated. A warning message will be displayed, but it will not overwrite. So now you can use as many fringe journals as you want. Before we had determined that you may only need one, but we were informed of otherwise, and we made that correction. We updated the modify transactions utility and accounts menu item to no longer require the transactions to be in the fiscal year to be updated. So that was a small change there. We added fields for overtime and payroll types, employees, and PFA settings. George will be going over with that. That is part of the no tax on overtime. We fixed an issue where a work order would show as both a related document and primary document and document management. We updated the change equipment code menu item to close ProFund when the user is finished. Changing codes and not after every code change. I believe we did the same thing for inventory code. It'll only close once you close the window, not after every single time. So you have to change a bunch of equipments at once, then you no longer have to keep closing and reopening and closing and reopening. In the equipment wheel hour, we remove the ability to set the year start date. The current fiscal year start date will always be used. Rerunning the calculation will overwrite any previous calculations done in the current fiscal year. So we don't allow multiple journals. There's just one wheel hour calculation for each fiscal year. When adding attachments, negative inventory, this is for my work. When adding attachments, negative inventory amounts will honor the system settings. So we do have system settings. We updated the comp time bank to include the bank level comp time max value. So before it wasn't honoring the maximum value that was set in the bank. All right, so that is with that. So let me go back to ProFund. I want to go back to perfect updates. So in the MERS, you go into MERS export file, you choose your plan month, you click load payroll data. I don't have any. Let's see, do I actually have any? Yep. Enter your plan number, you click calculate. And then instead of the create MERS upload file, you click on the create MERS test file and then save it. It'll save it to the area that you specified. So, and then you can send that file to MERS. Also, I would like to know maybe if somebody who has it successful would let me know for the different plans. That way I know that our format is correct and there's no changes we have to be made if people have already sent it in or not. That'd be nice to know that we don't have to make any changes. Okay, employee compensation package. Go to banks. I go into history. I load my history. We now have the notes field, and then we have this little button that shows the note if it's too long. So in any of these journals that I mentioned, like fringe benefit, we now have the journal description down here, so you can remove it and type in whatever you want, anything you want. So we added that to the cost of roads, post balances forward as well. In funds, we had this new copy button you could click on, and I'm gonna make it, how about 401? And I'm gonna click submit. And if you look at it, it copied all the account links and created the account numbers that were there. And then if I go into accounts and I just filter by 401, all my account link accounts with the full tree were created. So that way, if you're trying to create a new fund, you can easily copy. In the fringe spread, you can now enter in again. This says 127. You can now enter in, 3,000% if you want. So just to highlight that.
No tax on overtime. All right, here's what we got going on. Way back when our one beautiful bill got set up, so we had to get this no tax on overtime. But there's several things that make a no tax on overtime what they call a qualified overtime hour. And so there's a lot of things that go into that. So not every overtime hour that you've given an employee is necessarily a qualified overtime hour. The main thing we want to make sure is that everybody kind of understands that. So when we're calculating how much money qualifies for the One Beautiful Bills piece, it's designed around what goes into a qualified overtime hour. So we have a section here if you really want to dig into really what it is for what goes into it. We are using what's considered the FLSA or Family or Fair Labor Standards Act to say what a qualified hour is. And basically there's two pieces that make up a qualified hour. There's a lot of exceptions and things like that we built in, but the basic gist of it is the employee has to have regular hours of 40 in a week. Everything is geared on a week schedule. So we put everything together for a week, and during that week, did the employee get 40 hours of regular time? And then any hour that's above that regular time would be considered an overtime hour if they were paid an overtime hour rate for that amount of time. Now, there's several things that don't qualify as regular time for a week, so it may seem unfair, but this is the way it's written, this is the way it's handled. Things like if you have a holiday that week, then the holiday hours are not considered part of regular time, even though you got paid for those holidays. The idea is that that 40 hours is kind of the first thing we have to go by. So a lot of places you might give overtime if they come in on Saturdays and Sundays to work just, for the fact, or you might give overtime on anything over the particular portion of an hour per day. So like he may work one day, he may work 12 hours on an 8-hour day, would get 4 hours of overtime, but that's doesn't really necessarily mean those 4 hours are qualified if the next day he only works 2 hours. Because within this, within the week, he has to work 40 solid regular overtime or regular time before any of his overtime gets qualified. So it becomes, as you can see, quite a gnarly mess when we try to get into things. And then comp time adds a whole nother component of complexity to it. Also, not every employee qualifies for this deduction, so you're going to have to, there'll be a spot that you'll be telling us which employees actually qualify for the deduction, so that way we are only calculating for the proper employees. Again, the FLSA or the Fair Labor Standards Act overtime rules are applied, so just to make sure you understand, not all overtime granted qualifies for the deduction. Plus, if you have a pay type that it's like double time, that part of that does qualify for the deduction, but part of it doesn't. So it's a really, got to be very complex when we started digging into how we were going to calculate this number accurately. And then, like I said, comp time is a real special case, and it's handled as a special. It's I can get into the details if it's sometime when you call, but I didn't want to take everybody's time up on the long conversation about comp time. But just remember, if you're allowing employees to comp time, there's some special rules that go along with that. We've imposed in our calculation, but again, just so you understand, it's going to be hard for you guys to come up with that same number unless you really pay attention to every little step of the way. So again, let me just make sure that we cover the rules. It requires that all time after 40 hours of qualified hours are paid at a rate of no less than 1.5 times the employee's regular rate. So technically overtime. But if you paid somebody at 2 times, or if you paid somebody in comp time, those all have special, pieces. They've got legislation around it, and we've gone through that many times, and we believe we've got our calculation at a spot where it is going to be as accurate as possible with everybody's issues. We also have something in there about what is considered the current pay rate. If you have incentive pay on equipment that inflated the person's rate and he got overtime with that inflated rate, how does that factor into it? How do the hours factor into it? If you did manual bank adjustments on comp time hours, if you have a comp time bank, things like that. All of that we've factored in, and we've come up with a reasonable solution. Just so this has not been a lovely fun time. So again, we do need to know what a work week is. So we have a spot now that you've got, whether it's Sunday through Saturday, Monday through Sunday. Right now we have just a system-wide one for this year for 2025, but for 2026, it will be every employee can have their own starting work day. You may have different groups of employees, like drivers might be, you might want the drivers to be Monday through Sunday, and then the mechanics be, Sunday through Saturday, things like that. So you'll be able to define it per employee in 2026, but in 2025, it is just going to be everybody has the same work week. And only, again, qualified hours are counted towards the 40 hours. So sick, vacation, personal, holiday, and many others like jury duty and things like that are not considered, they're excluded from the count of 40 hours in a work week. So again, you may have given them overtime, which is fine. They don't say stop giving them the overtime. They're just saying these are not qualified overtime hours that can be used to be able to use for the deduction code. So there's a lot that goes into it. It's, again, I want to make sure everybody's aware it's not as simple as just, oh, it's these overtime hours multiplied by the 0.3 and he gets that amount. No. It is really, there's a lot that goes into this calculation that needs to be qualified. Now again, the rules have been relaxed in 2025, but in 2026 and going forward, these are the rules that they're wanting you to enforce. So we said, well, we might as well just enforce them in 2025 as well. So Once we've determined qualified overtime hours for a week, we only report the dollar amount that's reported is only the 0.5 portion of the pay. So it isn't, of course, the total overtime pay. It is only the half portion of the pay. And since the person's rate change over the year, Pro Fund Accounting, we do capture the rate of pay used for every payroll overtime record. So if you paid the person 2 times their rate, then um, again, we know that, and we will only capture the 0.5 of that 2 times the rate for what qualifies in the dollar amount. We also apply the proper math to additional equipment rates and rate adjustments for the pay types as well. The IRS does say that if they are given a bonus for hazard work that is included in this 0.5. So we interpreted that as if you do have incentive pay for using special pieces of equipment, that we will include the incentive pay into the final calculation. And then only time that is paid in the year qualifies for the deduction. So that gets a little bit tricky when you get, at the beginning of the year, January 1st, you're actually paying somebody for time in December of the previous year. Turns out the IRS for this benefit does not care when they really physically did the work. They care when the guy got the money. So again, on the check dates is what they care about. Then they care about the week the guy did do the work, whether he earned the 40 hours in that week. So it gets, like I said, it gets pretty tricky. Also, we found that for comp time, we have to go back to 1986 and requalify all of the comp time from then. Now, most of us don't have data going back that far, so it's not that big of a deal. But basically, since the FLSA was drafted in 4/15 of 1986, we have to go back to there to qualify all of the time that was done for comp time, because comp time, even if he did the work in 1986 and he never used it for all these years and finally uses that in this year, he gets the benefit for it for this year. And we went through a lot of documentation to verify that is correct. Okay, so what we're going to be doing for 2025, the W-2 is going to have in box 14 a line item that will say OTC for overtime compensation. And in 2026, the W-2 will be in box 12, as currently right now the code is TT in box 12, but that may be subject to change as we get closer to the end of 2026. But right now, the IRS has indicated that box 12 will be TT, and right this year, box 14 will have the value that we'll be reporting. So you don't have to have a special piece of paper. You won't have to do anything. Our W-2 will be what will calculate the number. And then eventually we will have some new reports that will help us, that you can help show your employees how did we come up with this number and what all went into that number. But this year, right now, we don't have those reports done. We are still struggling getting all of the pieces for the qualified comp time hours to be implemented correctly with, like I said, there's just a lot that goes into this. It's not a simple calculation, but we do have it under hands and it should be put out. But there's going to be some things that you guys are going to need to do in your database that for setup. So we're going to be putting out a release hopefully by the end of Wednesday of this week that will have these things in it. First, we're going to need under the system options, under the organization, that's where we put the default work week start date. So we know what day which day of the week you want to start your work week on. You're going to start from Monday through Sunday, or are you going to do Sunday through Saturday? Things like that. So you're going to have to tell us there. Right now, it defaults to Sunday through Saturday. But if your work week is really Monday through Sunday, then that's what we'll need. You're going to need to set that one time there for 2025. And then, like I said, in 2026, that's going to be switching to the employees because, we finally read a doc that says each employee can have their own starting work week if you desire. Then we set the payroll types. FSLA values to regular or overtime or none. You don't have to set it to none if it isn't one, but you're going to have to tell us what is a regular hour and what is an overtime hour. for your pay types. So if you have like O for overtime, that would be an overtime. If you have, reg or R for regular, that would be regular. You might have other types in there, and you'll have to kind of go through those each one and decide whether it's going to be a regular or an overtime. Generally, overtime will have as a payroll type a payroll factor of 1.5 or higher, and regular will not. But there's things in there, like I said, you might have meetings or safety meetings or, pay just other breakdowns of their pay that you wanted to do. You'll have to get with somebody to figure out if that is considered an FLSA valid work hour. Generally, they are, but there is a whole slew of regulations that go into all of those, and we just felt like we couldn't decide based on certain keywords whether it was supposed to be or not. So we just put a checkbox there for you to tell us which ones are and which ones are not. And then you need to tell us which employees are OTC eligible. And what that does is that tells us that this is the overtime compensation, they're eligible for it. So we don't spend the time because it takes quite a while to calculate this out for one employee. So we didn't want to have you have to spend the time on every employee. Employees that are salaried, they're not qualified. They don't qualify for this. There are administrators that if they're, you guys don't have it, but elected officials don't qualify. There's a whole, and again, you'll have to look at what is in the one big beautiful bill, who's considered eligible for taking this deduction. Okay, so before we get into the MyWeb, I wanted to just kind of cover, hang on, let me get this up. Cancel that. I don't have it up. Oh, there it is. Okay, so hopefully this is the right one. So like I said, we would come down here and we would go into your organization, and we go to accounting defaults, and we have the work week start date. So I've set mine to Monday for a test, Tuesday, Wednesday, Thursday, Friday. You'll basically just set what day of the week and start your work week. Once that's finished, then you come into pay types. And for each pay type, we have a new drop-down box that says, what this is. So if I come in here, we have back pay, that doesn't count, vehicle allowance, holiday. Now, jury duty, that doesn't count, but here's overtime. So for overtime, we marked it as FSLA type overtime. Personal time doesn't count. Regular time should be just regular earnings. So we mark that as FSLA earnings. Sick, vacation, safety meeting is one. Guard duty could be one. We don't know. Again, that depends on, for like guard duty, is the person physically, there's a lot of regulations. Like I said, you'll have to look at something like that if you have it. Sick time doesn't qualify. Commissioner's paid wouldn't be reimbursement. Pay in lieu of none of that really qualifies. Tool allowance wouldn't qualify. Then you have your comp time and comp time used for the reversal. None of those should be set for any of the FSLA type. Comp time we figure out because it's marked as one of them has the flag comp time. I'm not sure which one. Well, I took it out for this one, but anyways, so I can just say comp time. So we set up the pay types, and then we got to go to employees and set up under employee, under personal, and the specialty flags, we have OTC eligible. So if we come down through here, I've made several of them OTC eligible just so you can see it. And while currently this is just a test calculation, when you go to W-2 forms and you go in here and we pick 2025, we combine the two together, we calculate. We say yes to the recalculation, so it does it. So I'll try to pick, I think 54 Gavin is one. So if I modify it, I should see in box 14. Nope, he doesn't have it. Figures I'd pick one that doesn't have it. Didn't want to close the whole thing. W-2 forms, 2025. We want, QOP. That's right. QOP is the code because this is the premium amount. So this is qualified overtime premium amount. So this is the physical dollar amount that they would put on their 1040 for how much they got for the year. And again, this is a little bit light because there's pieces missing, but eventually this will be the right number. But this is how we're reporting it for 2025. So Wednesday, when you get it, should be able to do it. You can calculate this 100 times for W-2s. It doesn't hurt anything. And then you can kind of, try to go backfill and see if you can come up with the same number we do. It'll be hard, but you might be able to do it. Depends on whether you have comp time. If you don't have comp time, it'll be a lot easier. Comp time makes it very, like I said, I have to go all the way back to the beginning of comp time to make sure that if he's got any hours that are brought forward for FSLA or for FLSA comp time, that we can bring those forward correctly. All right, let's see, is there anything else I want to show? I think that's it. I am now going to answer any questions that anybody has about this at this point. And again, you can unmute and ask it, or you can simply just go in and type the chat. Well, I will be around. You can call me afterwards if you need to do it. I don't see any. Oh, here it comes in. What's funny is it doesn't affect that. When you pay it out, it will, it could still be where, and when you pay it out, do you actually pay it out with comp time, or do you do a bank adjustment when you do your payout? Michelle asked, our comp time does not carry over year to year. It's paid out in December. How does this affect that? It doesn't affect it at all. It just means that as long as the pay date has it, it'll have it. But okay, so when you do manual bank adjustments on comp time, that makes it a big wrinkle in how this thing works. According to because I don't know that the person got paid for things like that. And Heather wants me to go through what to do on the pay types again. So I'm going to go through that real quick. So if you go to payroll types, now you don't have this on your screen yet, but you will if it's a bank adjustment, then the hours still carry forward for qualification. So it's only when he physically uses it, because I don't know if a bank adjustment's paid. So that's become a gray area. So we said, well, we better make sure that this has to be paid, so they will qualify for it. So we can maybe build something into the manual bank adjustment at some point for it. But let's cover what you do. There'll be when you come into your pay types, you'll see an FSLA type. And there's 3 types: none, earnings, and overtime. You don't have to set it to none because they're already set to none. It's just there in case you said something incorrect. So first thing you want to do is identify any ones as overtime. And the easiest way to know if something is going to be considered an overtime for FLSA is if the payroll factor is bigger than 1. Okay, so you'll pick that, you'll set overtime, save it. Things like personal time don't qualify, but regular time is their regular earnings. So that becomes the FSLA earnings type. So this is just regular earnings that they come in. But see, like here we have safety meetings, guard duty, variety of other things in here, like commissioner's pay is not considered. It might be considered for your spot. Again, these are things that are going to have to be worked between you, possibly your auditor, but you'll have to then go and research it. But like I can say, anytime that they're not physically at the site getting a pay for it, so like sick time, vacation, holiday, those do not qualify for regular hours for FLSA. So this gives you a little bit better of a breakdown of what it is. There's some hard rules like that, but then there's some other things like if you're on call. Let's say you're on call, but you're not physically at the building, in which case then you don't qualify. But if you're on call and you are physically at the building in a room with a cot and you can sleep, then that is considered time. So it gets, like I said, there's a lot of goofy stuff, wrapped into what is and what isn't. You can call me for guidance, but I can't be the final person because I'm not a tax attorney, if you would, on this. But again, your basic, understanding that anytime they're not physically at the building, or in the case they're on the road, that's considered physically at the building according to what they're talking about. That kind of a thing. So again, like if you have some kind of other codes for, they get an additional bump on that. So now what this does do, and let me kind of cover some of this. What this does do is it does require then when you're doing the breakdown of this to pay attention to it. And so there's some things in there that are tricky that you may want to get into, because one of the good examples is if somebody worked 40 hours in a week, but really they only had 38 of those hours were, FLSA regular time. And then they had 3 hours of overtime. So technically you paid them for 3 hours of overtime because that's between you and the union and all that. We didn't want to get into that. But he got none of, if he comped those 3 hours instead, then none of those hours would qualify for this deduction. However, if he only comped one of the hours, then that would. The comp types, no, the comp types would have nothing. We know it's a comp time by the fact that what we do for your comp time is we go to the reversal pay type that we have, and we see that this flag is set. We go after this flag, then we read what bank it is, and then if you have any other deductions that update that bank, then those are your comp used deductions, and that's how we figure it out for it. So our staff can earn and use through 12/31, and that is paid out on the first pay of January. Well, the first pay of January does not qualify for the first pay of the last day of the year, so it's the pay date that this goes by. That's fine that they can use and earn through, but they don't the deduction doesn't qualify because it wasn't paid until the pay date. But they'll get it next year. I mean, the thing is this will carry over for the next year, even though you say they don't carry over in their payout. You can just leave it blank. You don't have to put none. The question is, do we put none in the field or for vacation or et cetera, or just leave it blank? You can just leave it blank. If it doesn't have earnings or overtime, then it's just considered, we don't even look at it. Okay, pays out if not used in December. Well, when you pay it out, the thing is, you need to make sure you're paying it out using your comp time code for the payout and not some other code that you've done and then do a manual bank adjustment. So if you do it the manual bank adjustment, then we're not going to pick that up. It has to be paid through by the comp time code. Otherwise, we don't know that this is comp time being consumed. And like I said, if you do bank adjustments on your comp time, that's going to be when we do the calculations on the comp time, we are ignoring all bank adjustments for what we call the carryover. Again, they're only going to get the thing about it is they only get what's paid in that year. So it gets tricky because comp time isn't guaranteed to give them the deduction either. We have to make sure that so we're actually behind the scenes calculating a bank of comp time that is considered qualified comp time. No, comp time that's used toward regular time does not count as an hour of regular time because technically if they comped 1 hour, they weren't physically there working. So that becomes not a regular hour because they're not physically at the site given on the comp hour. So you can see how this is pretty dang tricky. If just from the questions we're getting, it's not a slam dunk, simple dimple kind of thing. And we want to keep it so that you guys can still do, however you want to manage your comp time, however you want to manage overtime, however, it's the same thing happens for overtime. Not all overtime, like I said, is qualified for this deduction code. So it does become quite the unique prospect with it. But fortunately, we're the ones, doing all the hard work to get this to be exactly what it is, you need for the end of the year with the right number. And while you'll have to kind of trust our formula for 2025, the year of 2025 is the forgiving year. The federal government already says they're waiving all fines and things for 2025. But we still want to try to get it as close as we can because in 2026, this is, we got to make sure we are doing it the right way. Yeah, thank you, Heather. I do. She says we appreciate you doing this, George. I appreciate that, Heather. It's been the last 3.5 weeks has been quite because again we only got this at the beginning of November when they basically laid this out for how that was going to go and then what goes where and what goes what. So and then we're thinking, oh wait, we don't keep track of when they comp the hour whether it was a qualified hour or not, so we have to go back figure out all the so it got to be quite and then what do we do about the double time if they are comping a double time hour? How do we get the right, oh boy, it was quite fun. But we're close. And like I said, hopefully by Wednesday, we'll have it out to everybody. And like I said, you can run your W-2s, even before you're finished with the year, just to see what the numbers are up to at this point, and do some spot checking if you would, if you want to try to figure that out for them, for your employee, to make sure that you think we're close. And a lot, like places, if you're doing comp time separate from our software, you're going to have to then, our software will still, still give you the overtime if you want it to give you the overtime dollar amount, but then you're going to have to modify everybody's W-2 to add in their comp time because you're doing it separately. Yeah, speed dial. Kelly says thanks, but glad to have it at speed dial. Yeah, I will be here to answer questions, all throughout this time, and help you, with some formulas if you would, to see how we're getting the number we are getting if you need that. But like I said, we're also trying to put some reports together that you can show an employee, because then, obviously in the end, you got to convince your employee that this number is correct. So they need to, you'll need to be able to, generate something that you can show the employee, this is what we came up, this is how it comes to this number. Because there is some parts that seem like unfair. So like if I have, the 4th of July, well, I got paid for those 8 hours, but they don't qualify as 8 hours. So if I work overtime that week, none of that overtime is considered right. But you think, oh man. Okay, so I do comp time where I have two different pay types. One is the comp time reversal, which is nobody ever posts to this one. This is just what we use internally, and it has the comp time flag checked, and it's taxable. And that's just basically, it goes off to the accrued liabilities account number for comp time, so it just sits out there. And then the comp time used, this is when somebody is going to use an hour of comp time, this is how we post the use. So it comes up with the same bank. So again, we have one bank, so employee has to have that bank. And then same thing with comp time used. Now, some places use the same, and you can use the same comp time reversal value and use CMP for the employee to charge out comp time. It's perfectly reasonable. What we have found, though, is because of the way comp time does the hours by multiplying it by 1.5, employees tend to get confused about what happens in a work week if they have both comp time they're comping and comp time they're using, because the hours will show like 1.675. And it's like, what in the world is this? If you see what I'm saying, because you have, your 1.5 times the number of overtime hours that you're comping. So if I'm only comping a 0.3 overtime hour, then I've got, 1.5 times that. But then if I use 1 hour, I'm using a whole hour of use time, but the whole bank, it shows just, different. So it's been clear on some places to show two lines if you have the room on your pay stub for it. So we have the comp time reversal, show that. So they know when I comp an hour that went into comp time, and then we show the comp time used to say this is how much we've consumed, and then the math works out really cleanly on a pay stub. That's the only reason we do it, is so the pay stub looks clean. You don't have to, like I said, it's just, it's easier for an employee to follow what's going on with how much the comp time they have. Comp time used, it's basically the same thing without the comp. Oh, this should be taxable, my bad. This is just a test database, sorry. And you can have more than one comp time used. We've had, a variety of places that have, a couple of other ones because they want, different segments to have their own, to show differently within a report. So they're looking at reports for payroll earnings. They want to see the different earnings split up between them. So comp time, you can, that's why you can have more than one, another reason to have more than one if you do that. So if you want to show all your mechanics versus your drivers versus your, any other staff that you might have that's hourly and gets comp time. If two different overtime rates are used in the same pay period and both pay codes are FSA, will cogitate account? Yes, we do. Like I said, we take the rate at the time of pay. So when you posted that pay, if you would, he had a rate, and that's the rate we use for his 0.5% of that rate, provided you are doing, the math works out like this. We take the dollar amount, we divide it by the multiplier. So if it was 1.5 or 2.5 or 3 even, so we divide the rate by the multiplier, because when we calculate this, we store the final calculated rate from all of his input. So if he's, because there's times where you might have like an additional amount to add to the rate here on a pay type, or you might have a fixed rate. So we take whatever the rates are going to be all together, and we write that on every payroll record when we post payroll. So you got the number of hours, and this is the rate that was paid for this number of hours, then that equals the dollar amount. So we take that rate because we save that rate, and we divide that rate by the number of whatever the payroll factor was, because we keep that as well on each payroll record. So we divide by the payroll factor, that gets us down to the base rate. So if it was times 2, then we're back down to the times 2 of the payroll factor side. So then once we get the payroll factor, once we get the base rate, then we take and we multiply, we divide that base rate by 2. That gets us, quote, the half. And then we multiply the number of hours by whatever that rate is, and that's the dollar amount that qualifies. So if you're asking what the formula was, that's what the formula is. We don't look at the actual physical pay that's written there. We based it on what rate was stored when at the time of the pay. So even if he got a raise, let's say at the beginning of the week he was making, $23 an hour, and by the end of the week he was making $40 an hour. It's simply the way the FLSA code is written is that it's the rate at the time of pay. So it has nothing to do with what his current pay rate is in the personnel file. It is strictly just the rate at the time of pay. And since we capture that and save that on every pay, we have the data to be able to do this, where a lot of systems don't. They don't keep track of what that is. So they have other things they have to do to get this number correct.
To wrap it up, we're going to talk a little bit about the MIUI updates. The MIUI uses the MI login for business to access the service. I showed it off last webinar. You can log into your MI login account and request access. It should be granted immediately. The new file format for the upload is finished and tested using the provided testing area. In the next update that, again, as George talked about, should be Wednesday, will automatically be in the quarterly tax report. So you won't notice any changes. It'll just a different file format. They did provide an area for us to upload it, so at least the format itself is correct. And then when you go to file your fourth quarter taxes, you'll be using the new system. So the system is set to go live in actually a week from today, December 15th. There's really no changes you guys have to make in ProFund Accounting for this change. Like I said, we finished the file, it'll be in the next release. And then just a couple of quick reminders for the reporting season. Verify that all your vendors are going to get a 1099, that are going to get a 1099 have the same information as the IRS. You can use the IRS TIN matching to verify the vendors. We have a menu item for that with videos on how to use that. The IRS does limit you to only, I think, 5 submissions a day. So we recommend just if you have a bunch of vendors you want to verify, just do a bulk upload. Like I said, the menu item allows you to easily generate a bulk file. Verify you have access to the 1099 IRS taxpayer portals, the AIR portal, and the SSA AccuH to submit your W-2s. We tested our ACA forms. They were all accepted by the IRS. So they'll be in the next update again. You'll have the ability to have those new forms for tax year 2025. And for you individually, if you already have everything set up, you don't have to do anything else if no information changes. So then there's nothing else you will have to do. And if you have to make changes, please make them now, as it could take up to 6 weeks for the IRS or SSA to get back, especially with the tax season. With the holiday season, people may be, maybe a little harder, especially once we get into January. Once you get to January, the IRS gets really busy. So, all right, I am going to stop there for any questions. If anybody has any questions. Also, the IRS, as part of, I don't know if it's actually part of the bill or not. Yes, they are part of the bill. The thresholds are now $2,000 and not $600 for the 1099s. So if I go back into ProFund for a moment, and I go to payables, 1099 forms, the minimum amount will be 2,000 for 2025 and not 600 for the MISC and NEC. So we will have make that change for the minimum amount. So that is one of the changes that have been made, as well as then the minimum amount is now 2,000. So if you make under 2,000, you do not have to send a 1099 NEC or MISC. And then also, like I said, in payroll, you go to quarterly tax reports. You go to state. When you click on the MI file, it'll ask you to create the file, and you just click select the folder, and it will automatically generate the file. So it works the same as before. It's just a different file format.
You are now working smarter with ProFund Accounting. Thanks for watching. Be sure to like this video and subscribe to our channel for more content like this.